Hello students, myself Krunal Patel and welcome to Sri Jendra's Rank Zone classes. I am your mentor with respect to paper 1 of CA Foundation course, that is Principles and Practice of Accounting. We have started chapter 1, that is Theoritical Framework. Today we are going to discuss one small and interesting topic called accounting standards. Kindly pay attention, friends. It's small and scoring topics because it is considered as the easiest part of the chapter. Now, what is meant by accounting standard? What is meant by accounting standard? Accounting standard are written policy document. Accounting standard are written policy documents which is issued by expert accounting body or government or other regulatory body. Accounting standard are written policy document issued by expert accounting body or government or other regulatory body. Written policy document covering the aspect of recognition, measurement, presentation and disclosure of accounting transaction and events in the financial statement. So, accounting standard covering the four aspects of transaction and event in the financial statement, namely 1. Recognition, 2nd. Measurement, 3rd. Presentation and 4th. Disclosure. So, accounting standard are written policy documents issued by expert accounting body or by the government or other regulatory body covering the aspect of recognition, measurement, presentation and disclosure of what? Of accounting transaction and event of accounting transaction as well as events in the financial statement. Next, accounting standard deals with the issue of or cover the area of recognition of events and transaction in the financial. Second is measurement of this transaction and event which are recognized in the earlier step. Then presentation of this transaction and event in the financial statement in a manner that is meaningful and understandable to the reader of financial statement. And lastly, it deals with the issue of disclosure requirement which should be there to enable public at large and the stakeholder and the potential investor in a particular to get insight or knowledge into what these financial statements are trying to reflect and thereby facilitating them to take prudent and informed business decision. Read again, friends. The disclosure requirement which should be there to enable. First point is to enable. Disclosure requirement is to enable public at a large and the stakeholder and the potential investor to get. Second point is to get an insight or knowledge into what the financial statement are trying to reflect, and thereby third point is facilitating them, that is facilitating investor and potential facilitating public at a large, stakeholder and potential investor to take prudent and informed business decision. So accounting standard deals with the four issue. First issue is recognition of transaction and events in the financial statement. Second issue is measurement of transaction and event. Third issue is presentation of transaction event in the financial statement in a manner that is meaningful and understandable to the reader. And last issue is disclosure requirement, under which we have seen three aspects. First is to enable the public at large, the stakeholder and the potential investor in a particular financial statement. Second aspect is to get an insight into what these financial statements are trying to reflect. And lastly, it's facilitating to potential investors, stakeholders and public at large to take prudent and informed business decision. So friends, we discuss accounting standard are the written policy document issued by expert accounting body which covers aspect of recognition, measurement, presentation and disclosure of accounting transaction and events in the financial statement. Accounting standard deals with the four issue. First issue is recognition of transaction and events in the financial statement. Second issue is measurement of above recognized events and transaction. Third issue is presentation of above measured transaction and event in the financial statement in the manner that is meaningful and understandable to whom? Meaningful and understandable to the reader of the financial statement. And last issue is the disclosure requirement. Disclosure requirement which should be there to enable whom? Enable public at a large, stakeholder and potential investor to get an insight into what the financial statement are trying to reflect. And third is facilitating them to take prudent and informed business decision. Now we take objective of accounting standard. Purpose and objective for which accounting standards are laid down. First objective is eliminate the non-comparability of the financial statement and thereby improve the reliability of the financial statement. In other way, we can say that accounting standard enables the comparability of the financial statement due to which improving the reliability of the financial transaction can be achieved. So accounting standards are laid down to eliminate the non-comparability of the financial statement as well as improve the reliability of the financial statement. Second objective is provide set of standard. Provide set of standard accounting policy, valuation norms and disclosure requirements. So it provides standardized general set of standards, accounting policies, valuation norms and disclosure requirement which facilitate easily comparability, which improves the reliability of the financial statement. So two objectives of accounting standard. First objective is eliminate the non-comparability of the financial statement and thereby improving the reliability of the financial statement. Second objective is to provide set of or standardized set of standards, accounting policies, valuation norms and disclosure requirements. Next is benefits of accounting standards. Benefits of accounting standard. Benefits of accounting standards. Standard reduces the reduces the reasonable extent or eliminate the confusing variation altogether. Eliminate altogether confusing variation in the accounting treatment. Confusing variation in the accounting treatment used, which are used to prepare financial statement. So accounting standard reduces the or eliminates the confusing variation followed in accounting treatment which are used to prepare financial statement. So accounting standard provides standardized format or standardized treatment for various situations as well as various kind of transaction and events, which eliminates the confusing variation in the accounting treatment used to prepare financial statement. Second benefit is there are certain areas where important information are not statutorily required to be disclosed. Standards may call for disclosure beyond the required by law. So important information and crucial information are available to actual owners, that is shareholder and stakeholder or the users of the financial statement. Next benefit is application of accounting standard would to the limited extent facilitates application of accounting standard. Application of accounting standard would facilitate comparison of financial statement of companies situated in different parts of the world as well as different companies situated in the same country. So application of accounting standard facilitates the comparison or it eliminates the non-comparability function of the accounts, which improves the reliability of the financial statement. So three benefits of the accounting standard are: first is it reduces or eliminates the confusing variation in the accounting treatment which are used to prepare financial statement. Second benefit is it calls disclosure beyond the required by the law which are useful to the readers of the financial statement. And third benefit is application of accounting standard facilitate the comparison of financial statement in the same country as well as across the various countries in the world. Next aspect is limitation of accounting standard. Limitation of accounting standard Along with various benefits of accounting standard, there are two limitations of accounting standard. Which are they? Let's see. First limitation is difficulties in making choice between different treatments. And second limitation is restricted scope of accounting standard. First limitation is difficulties in making choice between different treatment. Treatment of what? Treatment is accounting treatment in the financial statement. Various alternative solution to certain accounting problem may each have argument to recommend to them. Therefore, choice between different accounting treatment may become difficult. For each and every accounting problem transaction, various alternative solution has been there which have been argued and recommended respective solution. Therefore, there is a dilemma arises regarding choice between the different alternative accounting treatment, which may become the difficult decision. Second limitation is restricted scope. Accounting standard cannot override the statute. The standard required to be framed within the ambit of prevailing statute. Sometimes statute do not consider the crucial or important information as well as presentation of important part of the financial statement. So, accounting standard which cannot be override the statute. So, standard required to be framed within the ambit of prevailing statute, which is considered a crucial limitation of the accounting standard. Now, we are discuss briefly the procedure or formation of accounting standard. Formulation of accounting standard. First of all, identification of area is to be done. Area or situation is to be identified for formulation of accounting standard. Then such area or problem has been forwarded to the study group which is constituted for the purpose of formulation of accounting standard. So, first step is identification of area or problem. Second step is constitution of study group and forwarded the identified area to the constituted study group. Third step is preparation of draft and its circulation between various groups and members. The study groups which are considered under step 2 are prepared a draft accounting standard and circulated it to the members of group of the society. Then fourth step is ascertainment of the views of different bodies on draft. After circulation, various feedback and views are to be welcomed by the study group and on the basis of certain recommendation, feedback and views, finalization of exposure draft is to be prepared. After considering the comments received on the exposure draft, modification in the draft would have been done. Modification in the draft or exposure draft have been done, and lastly it issued the accounting standard. Kindly note that, friends, accounting standard have been issued by the ICAI. ICAI means the Institute of Chartered Accountants, the Institute of Chartered Accountants of India. So, steps which are followed for the formulation of accounting standard are as follow. First is identification of area or problem. Second is constitution of study group, and identified area or problem has been forwarded to the constituted study group. Then preparation of draft and its circulation. Then ascertainment of views, feedback welcomed on the exposure draft from the various bodies. Then finalization of the exposure draft, and comments are welcomed on the exposure draft. On the basis of comment received, exposure draft has been modified, and lastly, exposure draft become the accounting standard on the issuance by the ICAI, that is the Institute of Chartered Accountant of India. Till date, following accounting standard have been issued by the Chartered Accountant of India, that is ICAI. Kindly note that, friends, here the list of accounting standard and title of the accounting standard have been given for all the accounting standard issued, but do not study or do not consider all the accounting standard in details, because all the standards are not in the syllabus of the paper 1 of CA Foundation course. So whichever standard is applicable to, or whichever standard is under syllabus of paper 1 of CA Foundation course, are to be dealt at the time of specific standard or topic. So here we consider only list along with their titles. First accounting standard is, that is AS1, which deals with the disclosure of accounting policy, disclosure of accounting policies. AS2, which deals with the valuation of inventory, valuation of inventory. Inventory generally includes raw material, finished good, work in progress, etc. AS3 deals with the cash flow statement, under which there are two methods of preparing cash flow statement, direct method and indirect method. AS4 deals with the contingencies and events occurring after the balance sheet date. Various events which are occurred after the balance sheet date but require the provision at the end of the balance sheet or as on the balance sheet date. As for example, dividend or provision for income tax. AS5 deals with the net profit or loss for the period, prior period items, and change in accounting policies, which accounting policies changes which require disclosure under AS5. AS6, which have been deals with the reparation accounting, but now it is withdrawn and considered under the AS10, that is property, plant and equipment. AS7, which deal with the construction contract. AS18, which earlier deals with the research and development, but AS8 is withdrawn, like AS6. AS9 deals with the revenue recognition. AS10 deals with the property, plant and equipment. Next AS is AS11, effect of changes in foreign exchange rate. which are applicable for the enterprises which deals with the import or export transaction or which deals with the foreign currency. AS 12 deals with the government grants. AS 13 prescribe the accounting for investment. AS 14 accounting of amalgamation. Amalgamation prescribe two methods, amalgamation in the nature of purchase and amalgamation in the nature of merger. AS 15 prescribe various employees benefits related accounting treatments, measurements and disclosure criteria. AS 16 which deals with the borrowing cost. Borrowing cost means cost of borrowing incurred for the qualifying asset. Qualifying asset, that is which takes substantial time to make. AS 17 deals with the segment reporting. AS 18 deals with the related party disclosure. AS 19 deals with the lease. AS 20 deals with the earning per share, which are applicable in the case of company assessee. AS 21 deals with the consolidated financial statement. 22 is accounting for taxation on income, that is which includes deferred tax provisions. AS 13 deals with the investment in associate in consolidated financial statement. AS 24 deals with the discontinuing operation. AS 25 interim financial reporting. AS 26 deals with the intangible asset, which includes goodwill, patent, copyright, etc. AS 27 deals with the financial reporting of invest in joint ventures. AS 28 which deals with the impairment of assets. And last AS 29 is provision, contingent asset and contingent liabilities. So here friends, we concluded our unit with respect to accounting standard, under which we have discussed accounting standard are the written policy document issued by the expert accounting body or the government or the regulatory body. Accounting standard covers aspect of recognition, measurement, presentation and disclosure. Disclosure of accounting transaction and event in the financial statement. 4 issues which are dealt by the accounting standard. First issue is recognition of the transaction and events in the financial statement, measurement of the recognized transaction and event, presentation of measured transaction and events in the financial statement in a manner that is meaningful and understandable to the reader. And last is disclosure requirement which should be there to enable the public at large, the stakeholder and the potential investor to get an insight into what these financial statements are trying to reflect, and thereby it facilitating them to take prudent and informed business decision. Then we seen objective of accounting standard. Which are they friends? First is eliminate the non-comparability, which improving the reliability of financial statement. Second objective is provide a set of standard accounting policy, valuation norms and disclosure requirement. Then we see benefits of the accounting standard. There are 3 benefits. Which are they? First is to reduce or eliminate the confusing variable in the accounting treatment. Second is standard requires or calls for information of disclosure beyond the required by law, which makes it transparent. Third benefit is application of accounting standard facilitate the comparison of financial statement within the same country as well as the across the country in the world. Then we also seen the two limitation of accounting standard. First is difficulties in making choice between different accounting treatments. Second is restricted scope as it cannot be override the statutes. Then we see the formulation of accounting standard. Then we see the list of accounting standard of 29 AS. AS means accounting standard. Now we take the multiple choice questions which are there under the ICI study material. First one is accounting standard for non-corporate entities in India. Accounting standard in India issued by central government, state government, Institute Chartered Accountant of India or RBI. Who issued the accounting standard, friends? Whether central government or state government, whether the ICI or the Reserve Bank. As we seen that the accounting standard in India are issued by the Institute of the Chartered Accountants of India, that is ICAI. Next, accounting standard harmonize accounting policy, eliminate the non-comparability of the financial statement, which facilitate the improve the reliability of the financial statement, all the three. So accounting standard, we already seen that harmonize the various accounting policy, eliminate the non-comparability and improve the reliability. So correct answer is option D, that is all of the three. It is essential to standardize the accounting principle and policies in order to ensure transparency, consistency, comparability, all the three. So correct answer is accounting standard required to standardize the accounting principle and policy transparently, comparability and consistency as well. So correct answer is answer D, all of the three. Now at the end of the unit, IC have given two theoretical questions for accounting standard. First is object of accounting standard. Object of accounting standard. There are two objective of accounting standard. First is eliminate the non-comparison which facilitate the friends reliability of financial statement. And second objective is as we seen that it provides the set of standards or set of measures, policies, norms, etc. for the accounting treatment. So we have already considered the two basic objective of accounting standard. Then advantage or benefit of setting accounting standard. We already seen the three benefits of the accounting standard. Which are they? First is it reduce or eliminate the confusing variation in the accounting treatment which are used to prepare financial statement. Second is standard may call disclosure which are not required by the law for make it transparent to the stakeholder. And last is application of accounting standard facilitate the comparison of financial statement within the country as well as across the various country in the world. So friends, I hope you get the understanding about the accounting standard and clear all the aspect of related to accounting standard. Thank you friends.